In this video, we're going to go over the 7 stocks you're going to want to keep your eye on this week. Every single Sunday, we go over the companies to keep on your watch list for the next few trading days because these are the companies that have a major event coming out. Whether it's an earnings report, a new product launch, an investor day presentation, for all of these companies we mentioned on Sunday, there is some type of event occurring that will impact the share price. This can either mean there's some short-term capital gains or a dip in a nice buying opportunity. So we always discuss different companies from various sectors of the market, and over this next trading week, there isn't a lot of things actually happening. Very few earnings reports, no major investor day presentations, and it is a shorter week on the market. So we still have 7 companies we're going to discuss today, and these are really based on the financials, a few earnings reports from some medium cap companies, as well as some new trends in the market that may lead to some increase in share price. So if you're new to the channel, everyone, I am the Gen Z Investor. Every single day we talk about the stock market, we go over different stocks you can buy and sell, and discuss any major market news and headlines. So please hit the like button, subscribe to the channel for daily videos about the stock market, and we're going to jump right in to the first stock in today's video, which is JP Chase. Ticker JPM currently trades for $119 per share, and the company is down over 13% on the 12-month chart. They currently have a market cap at $362 billion and pay a 3% dividend yield. So the financial sector we all know has been hit hard in 2020. And JP Chase is a company that I've been loading up shares on over the past few months. And we just got a huge announcement from the Fed where banks are allowed to do share buybacks in 2021. There are still some restrictions, and the banks are not allowed to increase their dividend payments just yet, but they are allowed to do share buybacks. And this is huge news because in the financial sector and with banks, 70% of the industry's capital payout to shareholders is in the form of a share buyback. So this is a huge way to return capital to investors, and all these major banks are known for doing massive amounts of share buybacks. And why JP Morgan is the first company in today's video is because minutes after the Fed made this announcement, JP Chase unveiled a new share repurchase program of $30 billion that starts in 2021. This is a huge amount of capital being returned to investors. We all know that throughout 2020, banks were actually restricted from doing any buybacks or increasing their dividend. And JP Morgan CEO said they are going to return any excess capital to shareholders and will continue to pay their sustainable dividend. So a lot of capital being thrown back at investors from JPM. The company, I believe, will hit record highs coming soon, and I think this company will recover past pre-pandemic levels in that $140 price range. If we take a look right now, they pay a 3% dividend yield. The dividend, I believe, is still very sustainable and safe over the next few years. They only pay out around 47% of their net income as a dividend. They grow it at a significant rate year over year. And I believe this company has a solid balance sheet right now. I think they've done a beautiful job of bolstering up that capital position over this past 3 quarters because of all the worry about the loan losses that really haven't come in as bad as people were expecting. So the news of share buybacks coming back for financials in 2021 has led to a sharp increase in share price in after hours trading. And you can see JPM is up 5.8% on the after hours chart. And I believe over this next week, all financial companies will have some nice upside and people will be more confident buying into these banks now that they know if the Fed lessened these restrictions, they must believe that the financial sector is healthier than before and they will continue to grow at a nice rate over the long term. Now on to stock number 2, we have Moderna. They currently trade for $140 per share with a $55 billion market cap. And this company is up 650% over the past 12 months, which is absolutely incredible. And of course, they're included in this week's video because they just got authorization to have the second vaccine publicly distributed across the United States. So this is huge news for the company. We now have 2 approved vaccines, and hopefully this can really help solve the pandemic and saves people's lives. So overall, Moderna is a company we have discussed on the channel before. This company does not have the financials to even come close to this market cap. They've seen a massive run up that's way beyond their means. But we're going to take a look at the current share price. If we go on the 1-month chart, shares are actually down over 17% from earlier in the month of December. So if you want to take a gamble on a company, and if you expect Moderna to have some nice sharp upward trends now that the vaccine is fully approved, then this may be a company and a nice price point to get into. They are down 17% from their most recent high, so this is a nice little dip in the share price, even though it's run up so much this year that it may be at an attractive level. And over the next year in 2021, analysts are expecting a massive increase in total revenue for Moderna. So right now in the current year of 2020, this company's average revenue estimate for the year is $470 million. But if we take a look at next year for the calendar year of 2021, we're expecting $8.32 billion in total revenue. So from $470 million up to $8.32 billion in top line revenue over the next 2021, which is over a 1,670% increase in year-over-year sales. So of course, this is a huge estimate solely and really based off the potential vaccine revenue. If this can actually happen, this would be incredible, and Moderna's share price, I'm sure, will be higher than the $140 that it sits at today. So an interesting company to take a look at. This new vaccine approval coming out over the weekend may make a nice surge over the next short week coming up. So Moderna, definitely a company to keep your eye on if you want to play some hype, play some momentum in the vaccine news. The next company we're going to take a look at is CYBR Software. Ticker CYBR currently trades for $114 per share and is up 17% this year. This is a smaller company with a market cap at only $5.62 billion. If we take a look at a 5-year chart, they are up over 219%. So some significant growth over the past 5 years. And why we're discussing this company this week is because the US government got hacked. There was a hack on the US government, and now cybersecurity is the new trend. Over the past few days, we've seen a large spike up in some of the main players in cybersecurity, and some of the largest companies that are already up 100, 200, 300% this year are already continuing to grow because of this new heightened fear. Some major companies like Microsoft even saw a hack as well. So cybersecurity is a new trend, and as we shift to a more digitized economy, that's going to only grow in popularity, and the demand for strong cybersecurity is only going to increase within every company across the world. So CYBR Software is a smaller cap cybersecurity play. So this company is at an interesting position right now. They are actually profitable, and they are growing revenue each and every year, which is different. There was a lot of other cybersecurity stocks I was looking into for this video, but a lot of them have huge revenue growth, so does CYBR, but a lot of them are also losing a ton of money each and every year, which kind of scares me away, because until you can actually turn a profit, there isn't really much viable options for future growth from some of these companies. So if we take a look at CYBR and their financials, their top line revenue has been growing consistently year over year, and over the past 12 months, they have $450 million of total revenue. And if we take a look at their bottom line, net income has been profitable over the past 5 years. Although with the increase in expenses over this 2020 because of the pandemic, you can see they have seen a little bit of a decrease in net income, but overall, they're still posting and are profitable each and every year, which is a great sign. So this is a kind of smaller cap company where I believe may have some upside because of the overall trend in cybersecurity. So take a look at CYBR if you want to get into a company in the cybersecurity space. Now on to stock number 4 in today's video, we have Goldman Sachs. Another financial giant. This is an investment bank that currently has a market cap at $83 billion. Shares are up 5% this year and currently trade around $242. And this is another financial giant with the news of share buybacks has climbed 5% in after hours trading. I have Goldman Sachs on my personal watch list as well, and I will be keeping my eye on them over this next few days. I think the financial sector as a whole still has a lot of upside going forward, and I think a company like Goldman Sachs, the investment bank, currently trading at a nice value at a forward PE of just 10, I think is a nice option to keep your eye on. If we take a look at some of their key stats, this year has been great for the company. They still maintain a profit margin of 17%, an operating margin of over 34%, and they have seen some beautiful growth in revenue and income over the past quarter. Quarterly revenue grew 30% year over year, and their quarterly earnings grew over 79%. Like I want to mention that this is a company that operates in the financial sector that was hit extremely hard. Of course, this is more of an investment bank, so it's a little bit different than traditional JP Morgan Chase, but they still saw close to 80% earnings growth over their past quarter. And if we take a look at their dividend, the yield is only 2%, but the payout ratio maintains around 21% of their net income, which is extremely sustainable, and they grow their dividend, averaging 13% per year growth, which is incredible. So the dividend starting yield may be lower, but it's compounding at a beautiful rate each and every year over the long term. So Goldman Sachs, another major financial company that I plan to keep my eye on. I am really liking this news that the Fed is allowing buybacks because the Fed understands that our financial system is healthier than expected at this point in time, and that's why they're allowing these buybacks. If they didn't believe banks and financial institutions were actually this healthy, they would not have changed their legislation. They would keep the restrictions in place, but they didn't do that. So I think they know a lot. They have some strong predictions going forward, and I am still bullish on Goldman Sachs and other major financial giants. On to stock number 5 in today's video, we have Paycheck, ticker PAYX, currently trading for around $97 per share. This company is up more than 14% this year. They have a market cap at around $35 billion and a current dividend yield at 2.5%. So this is a company that operates within HR and payroll services. They have a software program for small and medium-sized businesses to help conduct payroll responsibilities. So this is a very important earnings report because the small and medium-sized businesses have been hit extremely hard because of the pandemic. Those are the brands who have had to shut down their doors, and Paycheck is highly connected to that industry. So this report from Paycheck, and if they are able to beat and grow revenue and operations, actually shows the performance of over the 200 small and medium-sized businesses across the United States. So a very interesting company. They operate, of course, the payroll and different tax and overall cloud services for a smaller business. If we take a look, they report earnings on December 23rd before the market opens. Analysts are actually expecting a strong quarter. We've seen 15 upward revisions in earnings per share and no downward. So you can see over this past 90 days, analysts have been bumping up their expectations. The revenue estimate is $956 million, and EPS is estimated to come in at 0.66%. Over the previous 4 quarters, they have beaten analyst expectations each and every time, and actually in this quarter, we're expecting a 5% decline in earnings. So we'll see how they perform. If we take a look at some of their stats, this is a cloud company, so they do have some nice profit margins at over 26%, operating margin at 35%, beautiful return on equity at just under 40%, and over the past quarter, we did see a little bit of a decline in 6% of total revenue, but honestly, to be expected when the small businesses all across the United States were shut down, it makes sense that the company they use for their payroll and their different tax and other services does see a decline in revenue as well. If we take a look at their dividend, current yield at 2.5%, payout ratio is very high at over 87%, so the dividend is not completely safe just regarding the payout ratio, but they do grow it at a nice rate, averaging over 10% annual growth in dividend over the past 5 years. Now, so this company does operate within the small business space, so I think this is going to be a highly anticipated earnings report. I think a lot of people who want to get a little bit sense of the health of our small and medium-sized businesses are going to be going through, taking a look at how this company performed over this latest 90-day quarter. Carmax is the next stock we're going to discuss today. Ticker KMX reports earnings on December 22nd. This is another company that I believe people are going to be looking forward to their earnings report. They operate used car dealerships within the United States. And if we take a look, they actually own 216 used dealerships and 2 new car franchises. So this company operates in the used vehicle space, which may see a massive growth rate over this past quarter. So this company right now currently trades at a $16 billion market cap and a forward PE of 23.4. And why I'm looking forward to their report is because public transportation is not safe anymore. Because of the pandemic, people do not feel comfortable using public transportation, being in close quarters with people from all around their state, and they don't know where these people have been, who they've been in contact with, and whether or not they're actually following any health protocols. So public transportation is no longer safe during this pandemic. So people who can afford it are buying vehicles. And if we take into consideration the people who were already using public transportation, these are usually the lower income people. So these are not the individuals going out and buying brand new $50,000 vehicles. These are the people buying the used cars from the used car dealerships, and Carmax is a market leader in that space. So I think they're going to have a strong quarter. We're estimating revenue at $5 billion and EPS at $1.13. Over the previous 4 quarters, we have 2 misses and 2 beats, so some inconsistency for Carmax. But over this quarter, we're expecting 8.5% year-over-year growth. And if we take a look at Carmax and their total revenue, growing year over year, a slight decline over the past 12 months. Of course, we were at a point in time where the pandemic was so worrisome that people were not going out, no one was shopping. So it's understandable why we have such a little bit of a decline over this past year. But you can see before that, total revenue was climbing each and every year. Taking a look at the bottom line, this company is profitable, posting growing net income each and every year as well. So Carmax is an interesting brand. Used car dealerships, I think, are going to have a positive quarter. I think people, like I mentioned, are going to be scared to use public transit, and buying a used car is the next best way to get around. So take a look at Carmax. They report on December 22nd, another brand reporting earnings that I think is going to have a strong report, and we may see some increase in share price over the short term. Finally, we're at the last stock in this video, and it is Bank of America. We all know why this is included. JP Morgan Chase is the largest bank with regard to total assets and market cap, and Bank of America is second with a market cap at $248 billion. This company is down more than 18% this year, and Warren Buffett, during the height of this pandemic, was loading up on Bank of America shares, spending billions buying into this company. So they pay out a dividend as well, currently yielding 2.5%, a payout ratio of only 41% of their earnings. So again, I believe this dividend will continue to grow at a massive rate, and their share price is up more than 4% from the news of share buybacks. I own Bank of America. I may be purchasing more shares, and another financial company on my personal watch list as well. So those are 7 different stocks to take a look at this week. We have a lot of financial companies, of course, because that's really the main headline that drove them even higher. And of course, we have Moderna with the approval of their vaccine. And then we also have companies like Paycheck, which will show us the performance of small, medium businesses. And Carmax, their earnings report, I believe, is going to help us get a picture of how the overall economy and the lower income individuals are spending their money. So thank you for watching, everyone. I am the Gen Z Investor. We discuss stock market news every single day. Please hit the like button, subscribe to the channel, and see you in tomorrow's video.